Well, my husband brought it on the plane. It was the only little small shot that we had.
Oh, Lord.
No, because Esca, I took them to the airport. I was their taxi.
She was our taxi driver.
I was their Uber everywhere, Uber everywhere. Isn't that a song?
All right.
Yes.
Let me see.
Hey, I may be old, but I'm still hip, man. Don't count me out, man. Do not count me. Remember, I've got kids that are millennials, so they keep me up to date with everything.
Yeah.
Where is my pin? I turned off. Are we live?
Yeah, we're live.
Oh, okay.
Oh,
Well, I said I was going live, but I mean, I know we technically don't start until 7, but we could
You
just
know what?
chit chat for a little
I
bit.
can't be wearing a green shirt with a green background. I didn't even think about that.
Andale, go change real quick. 5.
Oh, let me see if let me change my background to see if it's, I can blur it.
Yeah, that's what I did. I blurred my background.
Is that better or no? That just looks weird on my hair.
Yeah, I feel like my hair looks weird
I'm
too.
gonna change my shirt. This is too green. I'll be back.
Okay.
Edgar, talk about yourself, where you're from, how many family you have, all that.
Wait, Edgar, what's your Instagram name?
Funny you ask. I don't use Instagram.
Uh-oh.
I wanted to hear.
Boo. No.
I do have one. I just never use it. It's Unforgiven, actually.
It's
With
what?
number 4 instead of the FOR.
Man.
I
For
get like 4 or
given.
5 requests every day that someone's trying to reset my password.
They're
Yeah.
trying to hack the hell out of you.
That's funny, Edgar. I didn't know you had an Instagram.
Yeah, I must have signed up for it like a long time ago.
Dang, you let that go, huh?
I've never even posted anything. I've just made the account and never used it.
Wow.
Until
What do you Facebook?
nothing. I'm not a big social media person.
Really?
Yeah. You can ask
Give me
Liza that.
1 second. I forgot I have rice cooking. Let me just go turn it off for my house.
I just never used it.
Yeah, I know. I don't know why, Edgar. But that's crazy for a millennial.
I know.
Maybe a Gen Xer. Like Brian's not that active on social media, but like he doesn't even have an Instagram account or a Twitter account. His Facebook is barely alive, but he doesn't care for it. But Keena, I know Keena's very active on social media. I'm not sure about Amanda, but Melissa for sure.
Yeah. She said she's big on Facebook. I'm more Instagram.
Yeah. I prefer Instagram and TikTok over Facebook, but I know you have your different audiences in every social media platform, so I just utilize all of them.
Yeah.
You cannot leave her by herself. Roll her into your office. Come on, Kitty. Come on.
You should probably take us off from live.
I'm going to take us off live. No, I'm just kidding.
Is that better?
Yes, it's a lot better.
And then I was like, well, shit, sorry, YouTube. If I changed my shirt, I had to change my
Your earrings.
Got a match.
That is so funny.
Girl, you know me. I love a what do you call these? What do you call them?
So I have an error
Fringe.
right now. Hold on a second. I have an error on my YouTube live stream. So let me see if I can fix this. That's so weird. Give me a sec and I'll see what I can do to fix this. Just give me a minute here.
An error?
Yeah, I'm getting an error right now. So stuff that I'm afraid of that's gonna happen. But I'm gonna see what I can do. No, I just let's see here.
I'm kidding, Edgar.
Can I hear you?
I said it's Edgar's fault.
Settings.
Typically it is.
Okay. Okay. I feel like I'm put together now. How about that? Is that better?
Perfect.
Ravishing.
Thank you. Okay. I got enough light. How's my light? This thing's too over here, right? How about
Yeah.
that?
That's better.
Better? Okay. While everybody's watching me get ready. Who's watching? Let me look at it. The crack of the beer, the sound, y'all. It is a Dr. Pepper. It's not a beer.
Cracking is fun.
But it's a miniature Dr. Pepper, Mina.
Why we designed Connect Team's time
All right, I'm
clock.
gonna end the stream and I'm gonna restart it, okay? Because I don't know what's
Okay.
going on. It's poor. Your stream will stop immediately and will no longer be live. Let me end it. Yeah, I'll just. Hopefully, I can pick up from this same link.
Yeah.
Actually, hold on. Let's see. I wonder what will happen if I refresh this. I wonder if, can people still hear us? If there's any viewers right now, can y'all hear us? Okay, I'm not getting any data right now.
You want me to see if anybody's responding?
Yeah, I don't know what's going on. It was working just fine, and I didn't change anything, so
I don't see that anybody's in here.
yeah. Okay,
I don't see anybody
Should be
either.
okay. Let me see. 10:20.
Ooh, we have 34 subscribers.
I was just about
now
to
it
say
says
that.
okay. I didn't end it, but now it's saying it. Now it's saying excellent condition, which is maybe it's the weather. I don't know. That made me nervous for a little bit. Okay.
Joanne Cifuentes says yes, she can hear us.
Oh, nice. Okay, so she's on. I'll say so we're good. So we got 3 minutes before we go live.
Awesome.
Edgar, go ahead.
Hi, Joanne.
Hi, Joanne.
Hi, Joanne.
Hi.
Hola.
All right, Edgar, you want to introduce yourself?
Sure. So, my name is Edgar Garcia, and I work with Prime Lending. Been there for about 12 years. Actually, no, excuse me, about 10 years. I've been a loan officer for about 12 years now. And before that, I worked at Chase. And I mean, I love what I do. I like helping people. It's a very enjoyable aspect, seeing, someone understand things that you explain to them and things that they didn't know about in terms of the home buying process or what they could do and, how to qualify, think of outside the box, things of that nature. And that's kind of the thrills I get out of my job. And I have a, girlfriend, and we have 2 dogs, Tango and Charlie.
Tango and Charlie, they're so cute.
I
too,
know
guys.
they are. They're so cute.
Come here.
Oh, who is it? Tango or Charlie? Which one?
The Tango.
Oh, look at them.
They're so cute. That's hilarious. Oh my
like a small dog.
goodness.
Look at he's cute.
Oh my
I don't
goodness.
Why not?
So cute.
Who is it?
Hi.
Tango, is that
Would you
Tango?
guys
That's
like? Would
Tango.
you guys like me to bring all of my kids, all of my lap?
Do it. No.
Just forgave them one by one, Amanda.
Tango,
God.
Tango, do I qualify for a home loan, Tango?
Yeah.
Okay.
Tango wants to know about the interest rates and whatnot. Oh my goodness, that's so funny.
How much do those treats cost?
I know,
Right?
right? $350. No.
Hey, Tango's like, close some more loans, Papa, so I can get more doggy treats.
That's enough. They get toys, man. They play tug of war all day.
Aw, that's cute.
But yeah, that's about it. I mean,
Nice.
obviously,
Where are you from?
But originally I'm from El Paso. and moved out
Grew
here
up in El Paso?
2005. Where?
You grew up in El Paso?
Yeah, born and raised. It's a much different city than when I grew up there.
I bet.
That's what I hear.
Say it again?
That's what I hear.
Yeah, me too. I'm hearing that
Yeah.
as well. I have a lot of colleagues that are from El Paso. It's so weird because you're
Yeah,
from
we all
El Paso.
migrate
There's a lot of people from El Paso.
Yeah, we migrate over here.
Yeah,
It's
y'all
called
connected,
Dream.
and then y'all, let's go to Austin, no?
It sounded delicious back in the day.
Right?
There's like no major cities around El Paso, so I feel like there's just nowhere to go.
Yeah, we're smack dab in the middle of nowhere. It's a desert, a beautiful desert. Don't get me
Yeah.
wrong, it's not dunes or anything, but it's very enjoyable. It's at the end of the Rockies, really.
Right.
Most people don't know that.
But if I'm not mistaken, isn't El Paso one of the fastest growing cities, and they have everything out there, right?
Well, you'd have to consider what everything is. Fastest growing cities, I don't know about that, honestly. I know we used to be the fourth largest city in Texas, and I think now we're the sixth. Because I think Fort Worth and Austin have passed us.
Mm.
Well, Austin certainly has.
Yeah.
Yeah, Austin. When I moved out here, El Paso was still bigger than Austin. And
Yeah.
now what's going on?
Yeah. That changed. Aw, wait, who did that? Melissa?
Yes.
Adding some virtual vibes. No.
Hey, for those tuning in, thank you so much for joining us. I hope we have more than one viewer.
I know,
I
right?
think I see Joanne there.
Joanne, yeah. We have 6 viewers. We have 6 viewers right now, and it's 7:01. So I lost track of time. You guys ready to start?
Yeah.
All right,
Yes,
cool.
Hi, wait, I think my grandma's on.
Oh, that's so cool.
Adelita.
All right,
Cool.
so let's start. And okay, so guys, welcome. We are ATX Homegirls. We are a collective, diverse group, empowered women, pretty much talking to you about anything real estate related. We are all realtors here in the local area, and we do have a special guest, Edgar Garcia with Prime Lending. We brought him on because, as you noticed with all of our social media posts, we do want to discuss what we have been saying, upcoming changes, but there are already changes that are happening. They're ongoing, and we also wanted to discuss interest rates and DPA programs. So I don't know if you guys wanted, before we jump into that, do a quick refresher on who we all are. Maybe we can start with Keena and get this going.
Let's do that. Let's do a refresher.
Okay, cool. Who wants to go?
Perfect.
Who wants to go first? Keena?
Yeah, hello, Keena.
Okay, fine. Yeah, well, I'm Keena Habeeb. I'm originally from Austin, well, Round Rock. It counts as Austin
It does,
these days.
it counts.
I didn't go far for college. I ventured all the way to Texas State in San Marcos. And then after graduating, I came right on back to Austin. Just made the most sense for me. I feel like this city I just couldn't get away from.
Mm-hmm.
So I started off in like HR and recruiting is where I originally started like my career at. Just wasn't the right fit. So I actually worked for a developer, home developer, and or a home builder and land developer here in Austin. And so it kind of got me even more interested in real estate. I wanted to do sales with them. It just didn't align with the timing.
Mm-hmm.
And I was really scared to go into real estate because everything's just so unstable. You never know how much you're going to make and when and all of that. But I became a mom and nothing scared me after that. So
Yes.
jumped on in, I got my license and just started going, just hit the ground running. And here I am now, really just trying to kick ass out here.
There you go.
Woo!
Yeah. Good for you.
I volunteer.
Amanda?
Well, I'm Amanda Alvarez. I was born and raised here in Austin, Texas. I've lived in Kyle Butte area, went to high school out there. And I was in property management for 11 years. After a car accident that I was in, I obtained my real estate license. So it just kind of sat me down and made me focus on something that I had really tried hard to get in the past, but kept on getting pulled back. I'm a mom of 4, and I stay pretty damn busy.
Yeah.
And she's
Awesome.
hiding in her closet right now because it's the quietest place in the house.
There you go.
Oh, I'm not. I'm in mid-rises. I'm downtown Chicago. What are you
No,
talking
gosh,
about?
Melissa, you gave her spot away. I'm joking.
I guess I'll go next, or you want to go, Liza?
Yeah, I'll go next. I'm Liza Brazzil, also born and raised here in Austin. Kind of like Keena, when I became a mother or found out I was pregnant, it's kind of one of those things where you kind of go all in. What can I do, right, to provide for my family, become something. At that time, I was experiencing some hardships, and at that time, I had nothing to lose, and here we are now. So real estate, I've been doing it since 2013, and I haven't looked back into normal 9-to-5 jobs, if you want to say. So yeah, that's it. I'm not gonna go too much like I did last time, so I'm gonna keep it simple. So it's now you, Melissa.
I'll try not to go long. I tend to get long-winded
Me
like
too.
Liza.
Me
so.
too.
So sorry, guys. So hi, Melissa Hudson, formerly Galvan, which most people know me through my maiden name. I won't get into that, but I got married at 42, so that's why I carried my maiden name forever.
There you go.
I'm from Austin, Texas, Southeast Austin. I grew up in the 78741. Is that my phone? You
Yes,
turn
it
my
is.
ringer off. I have 2 wonderful kids. They're in their 20s, and I have a beautiful, almost 3-month-old granddaughter, and she's a light of my world. And if you are following me on any of my social media accounts, you'll know everything about her because I update you as much as possible. So as far as real estate, I've been doing this almost 10 years, and I was in state government for 15 long years, and I was tired of being behind a cubicle. I dove into real estate. It was just an extension of serving people, and I have never looked back, and I'm so happy for the change. The only thing that I would have done differently is I would have done it a lot sooner.
Yeah,
So
exactly.
I'm happy to be here with y'all. Thank you guys for joining us. We are ATX.
Yes,
Homegirl.
yes. Thank you so much. And this is our second series. So, guys, we had a hiccup on the very first time we were trying to stream. That didn't happen. So the next weekend we were live and rolling, and then this one here we had a little hiccup as well. There was a little bit of a delay, but I think we're good. I think everybody can hear us. Everybody can see us. So hopefully you guys are getting some valuable content here. Shall we start with what's coming up?
Yeah.
Edgar, you want to take the stage? We're gonna put
You
the
want-
spotlight on
you
you.
can go for it.
So maybe we can discuss. I think it's a big thing with a lot of, how do I put it, with real estate and people that are wanting to invest in real estate in such a hot city as the greater Austin area. Looking at vacation homes and second homes. I think it's important for folks to know these changes that have taken place, and I don't think they realize that the change is on April 1st, right? If I'm not mistaken. But
It is.
yeah, go ahead. This is where you can take over right here.
It's a little bit different. So, yes, they announced that it takes into effect April 1st, but what people don't realize is that's for loans that get delivered to Fannie and Freddie, right? So any loan that gets delivered to them on April 1st, those changes are in effect. What that means for everyone else is that when you close a loan, it typically takes about 30 to 45 days before that loan gets packaged and delivered to Fannie Mae, right? So if it's 30 days or 45 days, that means you've got to close on your loan before the end of February, right? And so most people that are looking right now, it's not going to happen, as pretty much all rate locks are now taking into account the new loan. They're called LLPAs, the loan level price adjustments,
Right.
that have taken place. So starting for, at least for us and probably the mass majority of the lenders out there in the country, the 20-day locks take into effect tomorrow with the new pricing. So if you've got anybody today, they can still take advantage today up until about 11:50 p.m.
Okay. And what is that looking like, Edgar, with the fees, the interest? What does that look like for someone that is now coming in? They're thinking about buying a second home. What is that going to look like for them now?
So think of it as almost the equivalent of buying an investment property. That's how drastic the changes are.
Wow.
So
Okay.
think of it. So for people that are anywhere between 80 and 90 and 10%, 10% to 20% down, the loan level price adjuster is 4.125. What does that mean? So that means that, let's say theoretically, the rate you got, and I'm just throwing numbers out there.
Right.
Let's say your rate you got on a second home was 4% as of today, right? And it costs 0 points. So that means tomorrow, once you try and lock the rate, you can still get 4%, but it's now going to cost you 4.125 points to get that if you put 10% down.
Oof.
Right?
Yeah.
What is a point? Do you guys know what a point is? Or what does that mean?
Roughly 1%.
Exactly. So 1% of your loan amount. So that would cost you 4.125 points of your loan amount to get the same rate that you would have gotten today.
Oh my
And so those loan level adjusters take less of a hit the more you put down, right? But the point of a second home most of the time is to not put as much money down as an investment property and be able to take advantage of close to primary rates.
Can we talk about, like, and maybe any of you guys would echo in, if there is a possibility to snag a property that maybe isn't on the median home price here in Austin, I feel, maybe in just my opinion, it's still good. I'm talking about the outskirts, maybe within a 2-hour drive of your house or the Austin metro area. I'm saying that because that's what I'm doing. You guys know that I purchased property really not anywhere near Austin, but like the counties that are kind of bumping up against the counties that are outside of Austin. So I try to keep it under 2 hours, except for the big one that we got. It's a 3-hour drive. But Edgar, if the interest rate is going up for the second home, vacation home, kind of explain how a lower sales price may not affect them so much, specifically with down payment, especially if it's under a certain amount.
Not following what you're asking exactly.
You're not buying an investment property that's 400,000, 300,000. What if they're buying an investment property that's 150, 100,000, 200,000? How does that affect?
Well, it doesn't affect, so there's no changes to the investment properties, right? This only affects second homes and high balance.
Right.
So you still are getting a better deal as a second home than you are an investment property, because an investment property on a single family residence, they still require at least 15% down. On a second home, you still only need 10%. So that still helps you.
Right.
For the vast majority of people. I mean, 5%, on a $100,000 house, 5,000, 200,000, $10,000, so on and so forth. So, and the rates are still slightly better than an investment property.
Right.
Right. I guess that's where I'm getting at, is that because of the higher down payment that they're having to put down, maybe they get creative or flexible in the location, which a location could directly affect the amount of the loan they're getting.
Right.
And the down payment, if it's a lower sales price.
Right. So maybe what you mean, Melissa, is for any investors that were already in a bind, and then this is maybe going to throw them off because of the slight hike on that interest rate. They can still do so, but maybe in a different area now. You know what I mean?
Yeah.
Within that budget. Edgar, I do have a question for you. So obviously, when it's an investment home and it's not something that the person's going to occupy the property for a certain amount of time, as what would be defined as a second home. What is that definition, right? Is it 2 weeks out of the year for a second home? Because what if the person that wanted to invest and they didn't really want to occupy it that much after all, but they want to take advantage of a lower down payment rather than in an investment? I know with Prime Lending, y'all have a program where it's 15% for a first-time investment, and all the other ones, if I remember correctly, they're 20% for investment homes. But for second homes, no. Okay, go ahead.
It's only 15% on a single family.
Okay, cool.
But on a duplex, and this is where people forget, on a duplex investment property, you got to have 25% down.
25% down on a duplex. So on what about on a second home? What is the time requirement that they need to? Is there a time requirement at all that you guys are needing for a second home that they need to occupy the property for, or is it? What is that definition for you guys?
It's a range, right? It has to be a certain amount of distance from their personal home.
Yeah, typically. So there are overlays and there's underwriter discretions.
Right.
Okay.
And so for the most part, most underwriters want to see that home at least 50 miles away from where you live. Or if it's, and this is where, again, very underwriter driven,
Right.
but you could be in the same city, like let's say Austin, and you could potentially buy a house in like, Horseshoe Bend, I think, or,
Okay.
Laguna Vista and all that, because you're
Okay.
on the lake. So if you
Right.
buy lakefront property, they could consider that as a second family or second home.
Yeah, which would make sense. I mean, Lago Vista,
Lake house.
it's still a pretty. I mean, it's not that far, but it's a pretty good drive.
Drive-wise, it's pretty
You have
far.
to go all the way around
Yeah.
to
You gotta go around
1431.
the whole thing.
Yeah. Okay, cool.
But it's beautiful out there.
It is.
And the
It's
price,
really nice.
remember, Liza, Lago Vista, the prices used to be like so cheap
I
for even
know.
land back in the day.
I know.
Yeah,
Yeah. Go ahead, Edgar. What were you going to
I
say?
was going to say, I helped a borrower do a cash out back in 2013 on a house in Lago Vista, and their house was only worth $100,000 at that point when we did the cash out.
Wow.
Yeah.
Yeah.
And
yeah.
took out the max, which is 80%.
That is crazy. I mean, if you look now, I want to say it was hard to find homes under 300 when I last looked. And generally speaking, a lot of the homes were above 400. The lots, I want to say on average, I didn't see a lot.
Back in the day or now?
No, I'm talking about now. And lots, I'm not seeing lots under 30,000. They're averaging maybe 40 to 60,000, but obviously there's some other, unique ones that are 100,000 or a little bit more if they're like, it depends how much, right? But generally you're talking about maybe less than a quarter of an acre for a lot at anywhere between 30 to 60,000 on average. But the houses, right? The houses are now at 400,000 is what I'm seeing. Some are 500, some are now 700,000. It's just
Expensive.
crazy how much it's grown out in Lago Vista.
I mean, you could get like a little tiny thing, but
Yeah, you could
I
probably
know
get,
they
like,
I know they have a lot of mobile homes out there too in certain areas.
Yeah. Exactly. Were you going to say something, Amanda?
No, I just know that because we're actually on the market looking, for an investment property, and we're not planning on financing. Hopefully, we don't have to go that route. But I mean, it's just so expensive. Land has increased value like crazy.
It
So,
has. It's
Yeah.
and that's why Melissa mentioned, and this is why I like having this conversation about vacation homes and second homes and whatnot, because especially with land as well, land has gotten so expensive in the greater Austin area. I mean, you're talking about on average now, what, 200, 300,000 for just land.
and sometimes even more, just
Yeah.
depending on the location.
Exactly.
So, and a lot of it's not even an acre. You're looking at just lot size.
Exactly.
So
Yeah,
it's
subdivision
crazy.
lots. So
There's this house in Lago Vista that I looked up here. It was listed 6 days ago, and they already price increased it. And it's a new construction, but like you said, Liza, it's in the 430s.
yeah, that's what I'm seeing on average, 400s. I mean, with the price increases that have happened, and then this interest rate, that the change is pretty much. I mean, it's going to be hard right now, right, Edgar, for anybody to lock in at this time. So we can kind of.
They still literally lock in tonight.
Oh my gosh! All right, so
Is
for
there
anybody,
out there that's thinking about an investment property and is on the fence, call me. I can help you write that contract. We can lock you in tonight.
lock it
That's
in
right.
tonight. Yeah. I mean, Edgar, is that possible? I mean, if someone wanted to, I'm being serious. You never know. You never know who's
Yeah.
watching, right? So if someone wanted to, like, let's say someone is watching our stream right now. All right. Let's just hypothetically pretend this is happening right now. Someone's watching and they were already on the fence about buying a second home because of these changes. But now that they're seeing our stream and they realize they can still lock something in tonight, can they call you, Edgar, or can they get in contact with you and lock something in tonight? Is that possible? Or is
It
this
is,
something?
until
It
about
is? Oh my
11:50
gosh,
PM.
this is crazy.
11:50. Hey, everyone's gonna be logging off of our live just to go look real quick.
Website.
Oh my gosh. All right. So
DMing in the chat.
here's what I'm gonna do. All right. I'm going to in the message, I'm going to send Edgar's link to his site. And
idea.
I'm also, when we are done with this stream, I'm going to include it in our description so you can see the link in the description as well. So y'all go ahead and chime. Let me take care of this right now because this is important stuff. So give me just a second here.
I can also toss it in there, his contact information.
Yeah, I'm gonna toss in his site, Garcia Mortgage, right, Edgar?
Yeah, GarciaMortgage.com.
Okay, cool.
So I'm curious to know if people know what caused the increase on these interest rates for these second home properties. I know it's, the federal finance or the Federal Housing Finance Agency or well, I can't even talk. FHFA. Yeah. They're the ones that made the decision. Obviously, we all know that they work for the government, and Fannie Mae and Freddie Mac are mom and dads of these mortgage loans. And a lot of people don't know, once they close and obtain their keys, they sell their loans, they sell their mortgage loans. So I know that we're sitting probably about 14 to 15% with of loans that they purchased. And I know that they want to cut it down to 7%. So with that said, they're just tired. They just don't want to take on that risk anymore.
Yeah,
So I don't know if you want to chime in on that, because I know people might be confused, especially if they're not familiar with like the whole, why is it going up and stuff like that.
Yeah, they're trying to pretty much cut down on their risk, right?
Correct.
That's all it is. And especially on the second homes, and don't consider this as gospel or the, how would you say, concrete facts. But for the most part, it's pretty much driven, or not driven, but boils down to they are trying to kind of get rid of the whole second home movement, turn into an Airbnb kind of thing.
They don't want us to make money.
I know, right?
No, I think. Go ahead. No, I'll let you go ahead and talk.
So it's pretty much them trying to stop people trying to take advantage of very close to primary rates and still have it as a investment property, even though they bought it as a second home. And then all it is just reducing the risk because they see it. And obviously, as you probably know, a lot of people who buy their second homes don't really, keep them as second homes they're in their entirety.
Right.
And I could be wrong. It could be anecdotal, but for the most part, that's what we see.
Or they have a good intention, right? Like, hey, I want to get this second home. It's going to be great. And then they're like, maybe some circumstances have changed. Let me try this route. Yeah. I'm dying to eat one of these cookies, but I don't want to eat it on live. They're Thin Mints.
Just do it.
You're gonna be crunchy.
Just do it. I have a question for you, Edgar. So on the chat, we have a question. It says here, how do you get notified as a lender or agent that interest rates will increase? And how long will this effect take place?
So we get alert. In fact, anybody can look it up, right? It's public information. It's not like we come in or they tell us in the secret emails that we're going to be raising the rate, or not us, but Fannie and Freddie raising the rates. So it's public information on Fannie Mae's and Freddie Mac's website. They tell you the details of what's going to happen. And so go to their website and you can get updates on everything. And that's pretty much about it if you want it directly from the source. So everything you are hearing from me, we get from them directly. Right. And so what was the other question? Sorry.
And it says, and then how long will this effect take place? So I guess with that second question, there is no telling. I mean, because everything would go as whatever the market dictates for interest rates. Because it could hike up for anything. And transitioning on also with the interest rates, that the slight hike in interest rates, what are you seeing on your end? How is this affecting buyers that either had their rate locks expired, or they're coming in, they're first-time home buyers? Are you seeing any drastic changes, or everything is still going smooth as normal?
So I guess let me backtrack a little bit to his second question, or her second question. I think what they were asking is, how long is this going to be in place?
Okay.
And so
Yeah.
just like everything Fannie and Freddie does, it could be permanent, or it could be, they change it a year or two down the line back to the normal, loan level price adjusters. The impact it has on your rates is quite large, right? Like I said, if you're only putting down 10%, to pay that 4-point difference is quite a bit. So, I can't really say interest rate examples, but
Right.
it's going to be a big impact. Like, let's say you're buying the loan amount is $300,000, potentially, 4 points or 4.125 points. I mean, you're looking at easily, around $12,500 extra.
Yeah. And it's not chump change. It's a lot. It's a big chunk of money. So.
Well, speaking of that, so
And then-
this is a good segue, Edgar, into that other conversation that we thought we might have some time to talk about. What if you were that person who saved just a little bit of money, right? You're like, oh, I know I need 3.5%. Let me save some money, whatever it is they're able to save. And then, this variable comes into play. What kind of programs could you offer a buyer who's just perfectly, like the perfect vetted client for a home loan, and they're just lacking a little bit of money?
So I guess we're transitioning into primary homes, because in terms of second homes and investment property, there's no really down payment help.
Yeah, I'm
You can
jumping in this topic. Sorry, guys.
No,
Yeah,
it's
that's
okay.
fine.
Hey, it's live stream. Hey, you
kind of
guys get to see
combining-
everything.
Yeah, combining both Liza's and Melissa's question. So yes, we believe rates are on the rise, right? And there's a lot of external factors taken into account. The biggest thing driving the bond market really is inflation. Inflation's are not good for bonds, and indirectly us, right? Because we're based on mortgage-backed securities, not the Treasury, but most people believe the Treasury affects the interest rates and or the prime rate, which the government is going to be, we think, are going to be increasing either in March or in May, right? But yeah, interest rates, they're definitely on the rise. You usually have like 1 or 2 good days and then 2 or 3 bad days, and so it's kind of like this,
Right.
And then it's
But
going up and up
steadily
and up.
going up. Okay.
Yeah. So, as they say, buy the dip, or try to buy the dip. It's hard to time it. And so I can give you recommendations and guidance, but at the end of the day, it's up to you to decide when you lock the rate.
Right.
In order to answer Melissa's question, so there's a lot of help out there for primary residents. You don't even have to be a first-time buyer, but they're called down payment assistance programs. And there's a lot of them out there all over, the state of Texas, not just, Austin and Myron Rock and all that. And they vary by county. So every county has 1 or 2 separate or different programs, and then you've got like the statewide programs. And so I kind of wanted to touch base on one of the ones that they've kind of brought back. They've had it in the past. They just ran out of funds.
It's one of my favorite ones.
Well, the funds will run out eventually again. And so this is a bond program with THCA, which is the Texas Department of Home and Community Affairs. And right now they're offering assistance with a interest rate that is pretty much best in class, and with higher income limits and higher purchase limit, and which is a fantastic thing.
I think that's fantastic because gosh, with just like you said earlier, with inflation and prices have skyrocketed, we kind of need that. We need that. So this program sounds amazing already.
Yeah.
What is the increase in income limit for two person household?
So you're looking at up to 118,000,
Okay.
and that's who is on the loan together, right?
Okay.
Or excuse me, on the household income. So even if you have one person who's not on the loan and they live in the house, they have to count their income against them.
Okay.
Right.
And then the purchase price limits are 445,000. So
That's great.
That's actually
it's
really
great.
good. Yeah.
But that's in Williamson County, Hayes County, and Travis County.
Okay.
Right. Once you start getting the surrounding areas, the income limits do drop, and they're county by county. So I would have to tell you, look it up and tell you, because I don't remember all of them, because there's just, obviously so many counties.
There's so many, yeah. And you service all of Texas, so yeah.
Yes.
Okay.
Well, the whole country, but yeah.
Exactly,
for those,
yeah.
Mostly Texas. And so the biggest thing and the limiting factor, which most people don't want to hear, but, we do have to talk about, is that there are census tract limited. So they're targeted areas, and they're trying to target areas that are underserved, which are like low to median income areas. And so I've got the census tracts here that I could show you. Obviously, it's kind of hard to see on the camera, but you can kind of get an idea and send it to you guys as well after the call. But there's one census tract available in Hays County, which is in San Marcos. Unfortunately, there's none in Williamson for this particular program. And then there are 24 in Travis County.
Okay.
And so the
So
majority.
you say one in Hays?
There's only one in Hays, and that's by San Marcos.
Okay.
And so I think I can maybe show my screen.
Go ahead and share it.
Let's see here.
And 24 in Travis. I love this because one of the things that's really important to me, and Liza knows this about me, is that, sure, it's great to be a realtor and just to have this buyer come either pre-qualified or you send them to your lender and they're ready to go, with a 1 hour conversation and they're good to go. I don't want to count out people who are from the area that, can take advantage of these programs. I don't want people to feel ever that it's not possible for them, because it is. So thank you, Edgar, for sharing this information, because it may give someone who's listening hope, or someone who listens to this later, that these programs are out there, they're for you. And you could take advantage of them.
Absolutely. And so this particular program has census tracts limitations, but the rest of the down payment assistance programs that we work with, it's all over Texas. There's not census tract limitations. The only I don't want to say downside, the only difference is that the income limitations are a little bit more. One of the programs does not have a purchase price limitation. So you could literally, as long as they're under the conventional loan limit, which is $648,000, they would qualify.
That's awesome. Wow.
Which is a big thing here in Austin, because as everyone knows, well, I don't want to say everyone, but as we in the industry know, Austin prices are just ludicrous.
Exactly.
Thank you for talking about the 648,000, and thank you for starting the conversation with, it doesn't have to be a first-time home buyer. I think that's important.
That is very important. A lot of people are under the impression that DPA or down payment assistance programs are only for first-time home buyers, and that's not necessarily true. So, which is why I'm thankful for you, Edgar, for coming on board here and talking to us about it. I'm going to redirect people again. Remember, guys, if you want to know more, before you finish, Edgar, if you want to know more about this information, any census tracts, any DPA or down payment assistance programs, or you're thinking about buying a home, definitely consider Edgar. His site's already linked on here. I will link it again in the YouTube description when we're done with our stream. And I believe Melissa also, sent his information on there. But definitely give him a call or email him. He's very knowledgeable on all this information. He's helped me out a lot. So anyways, Edgar, go ahead and finish. I kind of cut you off there.
That's all right. Can you see my screen or no?
No, it looks.
Yes, you can.
Oh,
Okay.
I don't see it on my end.
It's black.
It's black on my.
Yeah,
there it is.
there
Now
it is.
it's there.
There it is?
Yeah.
Okay. So this is for an example, one of the tracks. So as we all know, Austin, you've got, 35 here, and then this is 183.
Right.
So everything that I've highlighted in green qualifies.
Okay.
Right. So right now we're looking at, this is 183. Sorry, this is 35.
Hey guys, if you're watching live, take a screenshot of what he's doing.
So, and then I can, obviously send it to everyone else.
Right.
So you've got this area, these census tracts. So you've got, the St. John's area, Camino La Costa.
Oh, I know where that's at.
Breaker, Runberg. That's just one area, right? And then you've got, for example, here, right, which is kind of our old stomping grounds, or at least my stomping grounds and Melissa's stomping grounds, and I think Liza's.
Hold
so
on
you've
a
got
second.
the river here.
Hold on,
I
Edgar.
think it's loading.
Yeah, it's loading.
Are you talking
So-
about Metropolis?
Yeah.
Oh,
Hey,
topless.
4-1.
Hey, 4-1.
It's
No, I
loading.
don't.
I think it's loading.
Yeah, I think it's loading. I don't see anything yet.
Hey, while it's loading, Edgar, one of the questions I get a lot with DPA, down payment assistance, is, okay, they're going to help me with down payment. Well, how much are they going to give me? They always ask me that. How much are they going to give me? So maybe while that's loading, while Metropolis is loading.
There you go.
can
Yeah, we're
see
still
that.
waiting for this map to load. Hang in tight, guys. But Edgar, go ahead and chime in on that.
So depending on what programs we use in the state of Texas, you can usually get anywhere between 2 all the way to 7% help. And depending on what county we're in,
Wow.
there's limitations, right?
Right.
So what does that mean? That means that they're going to give you help based on the loan amount, whatever percentage that is. So they could be like, for example, let's say we get 5% help and the loan amount is $200,000. That means they're going to give you $10,000.
Right.
Which for the vast majority of time, that will cover your down payment, most of your closing costs. And so you're bringing in, anywhere between $0 to $2,000 out of pocket.
Exactly.
That's huge, guys. That's huge.
It is huge.
Sometimes that's what people get back on their income tax. So just, consider that. It's amazing. It's a great program.
Yeah. Is it loaded up yet?
No, I think
No.
I think you'll need to remove it because I don't see it at all on my end.
What about there?
Hold on.
Yeah, we'll
maybe
give it a
Matt will-
minute.
hold on.
Yeah, we'll give it a minute and see if it pops up. So Edgar, while that's popping up, I did have a question for you. So on the
There it
okay,
is.
I do see the census tract. Go ahead, and then I'll chime in here in a bit.
Okay, so this is your old stomping grounds, or well, really most of us. So as you can see, this is the river. This is 35.
Yep.
This is Stastny, if I remember correctly. Oh no, wait, this is and then this is 183. So this is kind of the 4-1 zip code. So a lot
Yes.
of areas right here by Riverside, right? You've got this, all this,
Yes.
all this, and then you've got this
Hey,
area.
is my street on there? Where
I don't know.
I
zoom
see
in.
Felix Avenue, Ponca. No, I don't
Yep.
see your street, Melissa.
There it is,
Oh, there
right
it is.
So, and then this is the largest chunk, and then there's also areas where it's being gentrified a lot that are still available, and you'd be looking at this one right here.
Thank you for getting this track. Much
Yeah,
appreciated.
it's pretty cool.
Yeah, it's pretty sweet.
It's
All
good
right,
for those that
looks-
are visual.
It looks black, but hopefully
Do what you
it'll-
did last time where you closed one and opened one or whatever you did.
Yeah.
Let's see here.
So Keena, I know you've got some buyers that had some questions regarding DPA. While that's loading, maybe you can ask a question that they gave you on your Q&A.
So they weren't asking specific questions about the assistance program. I do have a buyer that's currently using it right now. But most people are just wondering, like, what are the qualifications, which you kind of reviewed. And then some people just didn't even know it existed at all. So that always comes up in conversation during like a consultation. And then this isn't necessarily related to down payment assistance, but a question I always get to, especially since I have a lot of buyers looking at new builds. But as we do see that rates are supposed to be, on the rise, what does that mean for somebody that got pre-qualified, say late last year, early this year, and they're not going to close 8 months from now? I know a rate lock doesn't last that long. So what do you suggest for those people?
Good question.
Yeah, that is a good question.
It's a tough one. I've lost quite a bit of borrowers that originally qualified, and with rates going up, which also means down payment assistance rates are going up, no longer qualify. And so either we have to pay off debt, or somehow, some way we've increased their income, or they might have to back away from the loan or that house, or hopefully the builder will work with them a little bit. But we have lost a decent amount. We're
black screen on the live, so let's get back on the grid.
Let's see here. Sorry.
It's fine. You can stop the share, Edgar, and we can carry on with the DPA conversation because I think that's an important topic.
I think I've got it. All right.
Someone's tuning in. I don't want them to be like, where are they at?
Mm-hmm.
I think I got it. Hold on.
Okay. Yes, we see ourselves
Yeah.
now. Yeah.
Sorry, guys. We were doing a screen share. If you're just tuning in, ATX Homegirls live YouTube series, we were just doing a screen share with the lender. It looks like we're back on the screen share.
Yes.
So
Okay.
now this is, can you see it?
Yep.
Oh, who put the heart?
I did.
I love it.
So this is 35, right? And then this is just north of the river.
Mhm.
So this is 183. So as you can see, these areas still east of 35, where it's kind of changing.
Right.
These areas are still eligible. And then up here as well by 290 and then 35.
Yeah. I think
And
there's
so
a lot of
there's more of them. I just don't want to go through them all
No,
at once.
right. Yeah, I
But I
think
guess
that's
it's
a
good
lot
to
of great
keep in
areas.
mind that of these areas. But not only that, guys, There's different ways to buy a property. If you're looking in the MLS and your realtor's got you set up, great. If they're able to find something off market, still use your realtor to help you with these contracts. If you see a for sale by owner, tell your agent, hey, look, there's a house in this area that was on this census tract map. Let me see if I qualify for this home. Of course, make sure you're pre-qualified before you do the home search, but there's different ways to find these homes, and old school ways, realtors writing letters to the neighbors. Hey, my buyer really wants to live in this neighborhood, for sale by owner, not just MLS.
Mm-hmm. Yeah, more than ever, I think it's important to have a realtor on your side to help with these transactions. I mean, this market has not slowed down. We kind of had a little bit of neutral grounds, or a little bit of a slowdown last year in the fall winter time frame, but it's definitely picked back up. And I don't see that slowing down. So you definitely want someone that's savvy and knows their information. You want them on your side to help you make an informed decision. So having a team, your power team behind you, your realtor, your lender, this is why we're discussing this, especially if you're gonna buy a primary residence to live in, or if you're thinking about buying a vacation or a second home. We can definitely help you there. And Edgar here is a great resource for that as well.
Absolutely. One last thing I wanted to touch on on the census tract. So the ones I showed you, obviously there's more, but the cool thing about that program, that specific program, is that theoretically, like let's say you found a contract and got a house today, if you got it in those census tracts, you could literally get 4% help, right? So let's say the house is $300,000, the loan amount.
Right.
You get 4% help, $12,000, your rate would be 3%, which is insane. You
That
get
is
$12,000 in
insane.
help and still have a 3% rate, which is lower than you can get.
Oh my goodness, that's crazy.
And I maybe want you to repeat that to the people that are listening and the ones that will listen later. So if you're not listening live, we forgive you, but please listen to this later.
Yes, for sure.
Repeat that again so they can put it in perspective, Edgar. That is so important, what you just said.
So for that particular bond program, at least for now, funds are limited.
Right.
In those census tracts, obviously there's more than what I showed you. You could get right now 4% help, which is again on a $300,000 house. 4% of that is $12,000. So you get $12,000 towards your down payment, your closing costs, and your rate right now would be 3%.
That is crazy.
So
I still can't believe that.
Does that make? I don't know about y'all. Does that make you excited?
That
for
makes
buyers?
me happy. It does.
It makes me so happy. I'm like, who out there can be helped? Hey, if we're not your realtor, call your realtor.
I know. Call your
Edgar.
realtor. Get Edgar on board.
I'm getting a text message. They want to know how much for a single person income. What's your typical range to qualify for a home?
It's just
So,
a limit, right?
That's a very common question, and so there's no direct answer for that. It all depends on what your monthly liabilities are, and by liabilities I mean 4 things that get reported to the credit bureaus: credit card payments, car loans, personal loans, and student loans. Student loans are a little bit different. Student loans, they'll take a theoretical percentage amount of whatever your loans are and use that as a payment, even if your student loans are in deferment. Usually, they'll take 0.5%. It used to be 1%, and that was killing a lot of people, but now they take 0.5%. And so we take that, we add up all your monthly debts, and we divide it by your gross income. So again, that's why we can't really tell you there's a certain income range, and we divide that. And as long as your debt to income ratio, which is what they call that, DTI ratios, as long as on an FHA loan, it's less than, it's going to vary, right? There's no hard set number, but it's usually as long as it's less than 56% of your total debt, you should be okay. On a conventional loan, less than 50. On a VA loan, man, that is all over the place, but you could usually get it still an approval around 62% or less, as long as you have enough residual income.
Right.
A lot.
Other topic. And on USDA, typically it's 43%.
Wow.
So
Can I chime in to see, maybe you can help but explain, when he says individual income, are you, Amanda, are they asking a question of what's the max amount of money they can make? or just like what's the minimum?
What's the minimum income?
Okay.
Yeah, I mean, it's impossible to tell without knowing those other
Factors.
things. Like, we need to know income, we need to know monthly debts, and then, see what the purchase range is in terms of like what they're trying to achieve.
Right.
But when you talked about the 118,000, that was for applicant income cap?
That's for the household on that particular program, right? There's other ones.
Yeah.
Right.
Maximum that will allow in the greater Austin area. Well, I want to say Williamson and Hayes County. There's one that will allow you up to 132,000, and the other one will allow you up to about 124,000.
You guys, that's so important. What if you are a great applicant for, or a great candidate to be a homeowner,
Right.
and you don't get penalized if you have money in the bank. So
No.
if your job pays 90,000 and you qualify for this, save your money, use the DPA program money.
Yes, and thank you, Melissa, for bringing that up. It's something that I did want to ask. With this competitive market, Edgar, individuals that do want to utilize the down payment assistance program, and they do have money in the bank, right? So let's say they were to submit an offer on a home, and and as you know, most homes are having or experiencing multiple offers, so they do have to put a little bit more skin in the game. Can they, on top of their DPA, right? And if they have extra money in the bank to bridge the gap, if they needed to, can they do that?
I was just about to ask
They
that.
can.
Huh?
Yeah, definitely
Okay.
can. I kind of want to clarify one little thing before
No,
I talk
go
about
ahead.
that.
Of course.
On the income limits, so there are programs where they take into account the household income, even if that one person's not on the loan. But there's other programs that will only take into account the income of that person on the loan. So let's say theoretically you both make 200,000 combined, but you only put one person on the loan that makes 115,000. You're still fine. You're
Okay.
good.
Wow.
So, but to answer the other question, yes. So they could use the DPA and put more money down to maybe cover the difference of the appraisal waivers, since we're seeing that
That's
all the
crazy.
time now.
That is
And-
crazy.
Guys, here's a solution on how to win an offer.
I know. I know.
Hallelujah.
Oh my gosh. This is
That's
crazy.
crazy.
Yeah, and I
Yeah.
mean, it's not, how do I put it? Because I remember with the DPAs, there was that threshold for a house, how high you could go, right? And then now with the increased, and it seems very reasonable. And like we had in our last stream, you could still find homes under 400, even under 450, under 500, under the median price, right? The median price that when we last discussed it was at 555,000, right? But you could still find homes under that price point, and you just covered all of those price points basically with the various programs that you have available. You can go up to 648 if I remember what you said, or up to
445.
Purchase price.
on the
Yeah.
purchase price, correct. So I think it fits everything. It fits what Austin has, or the greater Austin area. The income limits are high enough for someone to take advantage of this program. Why wouldn't you? You know what I mean? Why wouldn't you take advantage of it? So yeah, thank you, Edgar, for definitely
Use your
letting us
money to
know.
help you win the offers.
Exactly.
Like, who's tired of losing out on offers?
I
Raise
know.
your hand.
I do
for my
have
clients.
one more question from somebody that's on here. Are bonuses considered income if you've been with a job less than 2 years?
So it's treated differently. On a normal loan, right, to qualify for the loan, depending on what program we go with, if we go with FHA or conventional or VA, there's going to be different parameters. And so for bonus income, typically they want to see a 2-year history. However, we can use a 1-year history on conventional loans if we can prove that it's reasonably likely to continue. So when we verify their employment, the employer is going to have to check a little box that says, his bonuses or her bonuses are likely to continue. And, well, there goes my lights.
That's okay. We can hear you.
There
We can
goes
still hear you.
ERCOT. They're already getting you, man. Freaking ERCOT. I'm kidding.
I'm already told.
Hey guys, it
We're
has
all
begun.
just
No.
trying to one by one. Ding, 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 ding.
And so,
I'm gonna hurry up. Let's wrap it up. No, I'm kidding.
No.
so for the most part, as long as we have the 1-year history and we can get that employer to say it's going to continue on a conventional loan, we can do it. And then the other ones, most of the time they will require 2 years. But here's the kicker on down payment assistance programs. They don't care how long you've had it or how long you barely got your first bonus. They're going to take all the income you've made for that year and count it, not against you, but up against the limit. So
Okay.
like, let's say you
That's good
got
to
an
know.
bonus for 4 months, right? They're going to count that against you to qualify for that. But even though we can't use it to qualify for the loan,
Right.
if that makes
Gotcha.
sense.
Yeah, that
Yeah.
does make sense.
Okay. Hopefully that, answered it.
Okay,
yeah.
Edgar, I have another question for you. I lied. I do have this question come up a lot. When you get down payment assistance and you use it, do you have to pay it back?
There are
Ooh,
different programs.
Great
So
question.
there's a vast majority of them.
I like the
Thank
answer to this one.
thank you for asking that, because I can't really ever get into that because we get other questions. But yes, so there are many programs that all boil down to pretty much 3 different types, though. And the first type is the money that they give you is a grant, meaning that whatever they give you, you don't have to pay back. Well, technically, as long as you don't sell it within 6 months, you don't have to pay it back. But honestly, unless you're trying to do a fix and flip, you're going to be keeping your house, for 6 months.
Right.
The other type of loan, the other type of down payment assistance program is called a forgivable loan, meaning that as long as you keep the house for a certain amount of time, you don't have to pay back that money. Typically, those are forgivable loans at 3 years, 7 years, and 10 years, right? There's a few 5-year ones out there. And so all that means is, depending on the program, like let's say you bought it now and you sell it in March of 2025. That means if they gave you $12,000, you don't have to pay anything back. But if you sell it in February of 2025, you got to give all that money back.
I have a
Right.
question on that.
Sure.
What about refinances? What if they refinance? Does that count?
Yeah.
Okay.
So I'll get to that question
Okay.
after I finish this one. And so on the forgivable loans, there is also another one where they start forgiving your loan on a prorated basis. So typically on the 5-year ones or the 7-year ones or the 10-year ones, after a certain amount of time, they will start prorating it, meaning that every single month you owe them less and less and less if you sell the house at one point. So maybe like on a 5-year forgiveness one, you sell it with 1 year remaining, then you might only have to pay back, a very, very low amount of what they
Right.
gave you. And then the last type of loan programs are the money that they gave you as a silent second lien, meaning that it's 0% interest. You never have to make a payment on it, like a monthly payment, but the money that they give you, eventually you'll have to pay it back, which segues into Liza's question. Do I have to pay back that money? So when one of 3 things happens, so like let's say we get the 3-year forgiveness loan or the one where it's a silent second lien, that means that when you either pay off the house, you sell the house, or you refinance the house, you would have to pay back that money. Does that make sense?
Yep, it does.
Okay. So, like let's say, and this is what, some people have tried to do, and they ask me this question is, well, what if I get this super high rate down payment assistance program and then I just refinance, 2 months later? Well, if you give the forgiveness loan, you're just gonna have to give that money back,
Yeah.
right? Because they're trying to stop people from exploiting it.
And you know what? And let me ask you on that. I think a lot of people get so stuck on the idea that, for example, if I'm just going to use example numbers, if they got an interest rate on a loan at 4%, or actually let me use 4.5%, but they have an opportunity to refinance that same loan into a 3.8%, right? And let's say they got a DPA. And I'm making up numbers here, but it's for the sake of this argument here in a minute. I would think it defeats the purpose if you got help, right? DPA assistance for $12,000 to save on the interest rate, refinance, and you have to pay all of that back. It doesn't make sense, right?
That's your liquid cash.
Yeah,
at that
because
point.
wouldn't that defeat the purpose to refinance?
It would, depending on there's always going to be a break-even period.
Right.
Right. But for the most people, or for the most part, the interest rate shouldn't make a huge impact of deciding to use down payment assistance or not. For most people, it's either you use the down payment assistance and get the house, or not use down payment assistance and not have enough money, and you keep running the hamster wheel of saving money, but house prices keep going up and you just never have enough money.
You never,
Exactly.
the race. You don't
Yeah.
even have
And so
Exactly.
for the most part, no, unless you're way down the line and like, let's say, knock on wood, the world blows up, we have COVID 5,000 or something.
Yeah.
And
5,000.
all the world's economies, fall apart and rates go down into the low twos again, you're probably not going to be refinancing anytime soon.
Right, exactly. I think some people got a little refi happy in the past year or so, and on some of them, when I would talk to some people, it wasn't that much of a difference. That I don't think would have made that much of a difference to refinance.
And can we also say that most people will live in their home at least 3 years? I just want to note that. So if you're like, oh, I don't know if I want to do this DPA, there's a forgiveness time. Like, for the most part, you'll live in your house at least 3 years.
Yeah.
For its specific. Yeah.
And getting $12,000 up front versus, paying an extra, just for example, an extra $80 to $100 a month versus getting a super low rate.
Yeah.
I mean, personally, I would rather take the money up front because the value of money is now.
Exactly.
Boom.
Yep.
Mic drop.
About that.
Yeah.
Mic drop.
I wonder if there's a, yep, here it is. Is this the right
where's it?
emoji? Yep. Wow. There you go, Melissa.
Okay, so
Oh, that was
one of
Amanda.
the questions someone asked me here recently, I had a buyer consultation earlier and talked to them about DPA. They do have some money saved, but they, it's a starter conversation, and they want to buy their first house, but they want to continue to buy property. And they said, well, if I'm using down payment assistance and I'm living in that home as my primary residence, can I then later qualify for investment loans?
Absolutely.
That's a good
I told-
question.
yes.
That's a great
Yeah.
question that a
Wanted
lot of
to
people
say.
don't know. Yeah.
Yeah, it does not preclude you. You can use down payment assistance and buy as many investment properties as you want. The only time it affects you is when you're trying to buy another primary house when you use your down payment assistance on the first house, right? Typically, they'll want you to either sell the house that you have, or you can have, like, in terms of if you already have a property, but you didn't use down payment assistance on it and you want to buy another property, there's programs out there that will allow you to still use down payment assistance programs, even though you're not a first-time buyer. You can still own a house already
That
and
is
buy another
crazy.
primary and use help.
That's
That's
insane.
called getting creative.
Yeah,
And that's
exactly.
awesome.
See, but the problem is also people don't know to ask these questions, and then they're left missing out on these opportunities, these great programs. Edgar, I had a question for you from the chat. It says, how do gift funds from other people take into effect on all of this?
So it has no impact on the loans, well, not the loans, but on the down payment assistance program. You could get a $50,000 gift, and it does not impact what you get from the down payment assistance. They don't care.
Nice.
Again, they don't care what your assets are. Now, depending on who's giving you the gift, then and what program we go with in terms of like FHA, VA, conventional, USDA, then there are some rules with gifts. But in terms of how it impacts your down payment assistance program, it does not.
Perfect. Yeah. That's a great question.
Well, awesome. I didn't see that question. Are there any other questions you guys have? If you're tuning in right now for Edgar, we can ask for you live right now.
Yeah. Ask away while we're here.
Yeah, every question gets a free taco.
There you go.
Also, I just want to say again, guys, ATX Homegirls here, live YouTube series, and we just want to thank you for joining in. If you are here for the second episode, thank you so much. Let's give them a round of applause for.
Yay! Thank you so much, guys. We're new, but we're excited. I hope all of this was valuable to you guys, because I certainly think it is. And I'm hoping that someone, if you guys have questions, please either ask it here on the chat or get in contact with Edgar or one of us. We're more than happy to help you. It's a big subject. All these vacation and home mortgages with the changes that have happened. All of this is brand new. Plus the DPA is a big subject. So there's many programs out there. And normally what happens if you're interested in having this when you purchase a home, Edgar can kind of do like I'm assuming you do like a questionnaire or interview them to see what's gonna best fit for them, right? On the purchase side.
Absolutely. It's always what's in their best interest, right? We can't steer them anywhere, right? And that's illegal anyway. And so we always ask I always ask, what their situation is. If we take into account, I always ask them, what are your plans in the future? 5-7 years from now, where do you plan to be? Because depending on all these questions I ask them, it's going to affect what I recommend to them.
Exactly.
Right? Because there are times where, I've told them, down payment assistance might be great, but in this one particular instance, I might not recommend it. Or vice versa. We have situations where they never thought about down payment assistance. They have their money, but they're like, I want to keep my money. I don't want to spend it all or spend any part of it. And I'd rather get help if I can get help, things of that nature.
Right.
So hopefully that answers the question.
Yeah, it does. Definitely. Very helpful. And I don't see any other questions. Edgar?
I also want to
go
say
ahead.
really quick, guys, a lot of times in my past experience, especially with first-time home buyers, there's this sense of like anxiety, or they're leery to talk to a lender because they feel like that's a commitment. I just want you guys to know, just as an education piece from us realtors to you, a conversation with a lender does not always have to result in a credit pull. There are lenders that will actually talk through things with you, kind of get an understanding of where you stand financially, and can help guide you and say, yeah, this is probably a good time to pull credit so we can really see a bigger scope. Or, maybe you just need to wait a little longer, and we can pull credit maybe in a month or two. But I don't want anybody to ever feel like they can't even start or initiate that conversation, because it's, it's to your benefit. And the good lenders like Edgar will be there to guide you in the conversation. So a conversation with the lender does not always equal a firm commitment, but it's always good to have that conversation first so that your buying power, and you'll have that confidence moving into a home buying process.
Exactly. Well said, Melissa. Very well said.
Yes.
Yeah, it's one of those things where, and I'm sorry if I'm interrupting anyone.
No.
It's one of those things where, as Liza and Melissa know, and I never run credit. I always talk financials first, and talk about their monthly debts first before we even touch their credit, so we can kind of get an idea of where they stand without having to do a hard pull. Because I'm a big stickler for credit, and I despise just random pulls before they even talk to you. Like some lenders, and again, I'm not throwing anyone under the bus.
Mm-hmm.
I hear that a lot from other people that have come to me, that they fill out an application, and the first thing they do before they even talk to them, they run their credit, and then they talk to them. Mm-hmm. And of course, everyone's different. And so the last thing I wanted to touch on, and again, I don't want to, keep talking in it.
You're fine. Go ahead.
You're fine. Go ahead.
Is so lately, since because of COVID and everything, and I can't really meet most people, or most people are afraid to meet me in person. Mm-hmm. I have been doing a lot of Zoom calls, or Skype calls, or Google Meet calls. And the benefit of those is not necessarily to see, my beautifully ugly face. You can see my computer screen, and we can go over every scenario you can think of in terms of how it would impact your down payment, your cash to close, what your monthly payment would be. And I think, Melissa, we've been part of this, and I think Liza too, where you've seen my screen, and every single hypothetical you've had, we go over it, and you can see it instantly how it affects you, instead of hearing it over the phone. Because I don't know about you, but as my mom says, everything you hear over the phone, 50% goes in through one ear, not the other.
But she says it in Spanish, right?
Yeah. Yep.
Go ahead, say it how she would say it.
Yeah. So she says that te entra un oído, te sale el otro pendejo. So.
That's so funny.
I like
but
that
it's
better.
so, you know what? It's so true, Edgar. Like some people are visual, right? They love seeing exactly what everything means to them, the numbers, the down payment, their monthly payment, how their credit is affecting them. Maybe they have something that they can work on, or maybe they're like 1 point away, right, from going on to the next bracket. I remember when I bought my house, I think it was like a few points from getting the better interest rate. I was like, you know what I mean? And there's stupid things too, stupid things that you can easily fix that we just don't really care to look at. But yeah, Edgar's great at that. He presents scenarios, and I'm all about scenarios. I'm all about numbers and scenarios, and everybody's different, and I'm also very visual. So when I hear things, it kind of goes, like you said, goes in one ear, out the other. I'm like, I need to see, what are you talking about? So yeah. I think that's great that you do that.
And then also knowing what to pay off, because I have a lot of buyers, they want to dive into this finance conversation. I always say, you got to talk to the money guy. I can kind of vet them, guide them to the lender, but I am I'm not the money person. I will negotiate on your behalf. I'll kick ass during that contract process. But talking to a lender,
Yeah.
they can say, hey, look, I'm looking at your report here, and you would be really surprised if you paid off, you know, this one, and this one, how likely your credit score is to go up. And I think a lot of buyers are really surprised when they talk to lenders, and lenders give advice on that and say, and so this whole while they're thinking they need to pay this certain bill, and it doesn't weigh as much whenever they're the payoff. When they pay off that particular debt, they're thinking their credit score is going to go high. There are certain items, right, Edgar, that you can say that, you know, they would be quite surprised that they haven't paid. They could pay and increase their credit score.
Yeah, I don't want to delve too deep since I'm not a credit repair specialist.
Yeah.
But for the most part, the biggest things that impact your credit are your credit card usage, utilization, you know, what you owe versus your credit limit on that particular card, and then all over your other cards, and collections. And the biggest thing I see all the time, and I really hate it, not because I hate it personally, but because it's the stupidest thing ever, are medical collections.
Yeah.
And medical collections are the bane of really everyone. There should be, in my opinion, of course, we shouldn't have medical collections. You know, if you can't afford healthcare and to be dinged for that,
Exactly.
it's terrible.
Yeah.
But yeah, paying off collections, lowering your credit card usage is the biggest things. The biggest thing I see is that people don't realize is that paying off installment loans, like personal loans and car loans, really doesn't help you at all.
No, it doesn't.
Thank you for saying that. maybe I was trying to articulate myself in a certain way, but that's what I'm trying to get at. Like, just talk to the lenders and they can tell you, don't worry about this one, do this one. It'll help you.
Yeah. Just a look. And then before we end this, I have one more question, which is kind of a funny question. But Joanne's asking, are you able to get a blanket mortgage loan before 11 p.m. tonight on your first home and a second at the same time? Is that even possible? You got a lot of work to do, Edgar. No.
Is that your sister, Liza?
Good. You definitely could. It's just a matter of, you know, excuse your language. What time is it? 8 o'clock? You would have to haul some, you know, BUTT and
Yeah.
get it going.
And call you,
Hi,
right?
Debbie. Hi, Rochelle.
That's so funny. But I don't see any other questions that are being asked. I don't know if anybody else is getting any questions on their end.
Nope, I think that was all.
You know, I've got a few questions. You know, since you guys always ask me questions.
Yeah, for sure.
You know,
Okay.
Ooh, he's gonna turn the tables here. let me put my realtor face on.
Okay.
So I get people that, you know, come to me as well, and they're afraid they may have a realtor already, and then the realtors, you know, maybe not necessarily helping them out as much as they should be. One of the biggest questions I get is, if I already have a realtor and I'm talking to them, but I don't feel comfortable with them, or there's a language barrier, or, you know, I feel like, you know, we could do something better, or I guess more attention or something. I don't know. Can I move from that person to another person? Is there anything that precludes me to doing that? Or
The short
what am
answer
I?
is yes.
Yeah, we can't do that, right? We can't say, we can't say, oh, you need to work with me, right? We can't personally say that, but you're not a realtor, so you can, right? You use your best judgment, and then you can tell them that, or they can make that decision themselves.
I've talked to people who have had other realtors, and the very first thing I say is, do you have a buyer's representation agreement? If they say yes, then I say, I'm not able to have this conversation with you regarding real estate. Please talk to your agent. And really, that's the hard stop for us. But the short answer is yes.
Can you kind of expand on that? What a buyer representation agreement means? So for like people that are watching, they may not know what that means exactly.
It's an agreement. It's a signed agreement between a realtor and the buyer.
Yeah, the realtor has a fiduciary duty to that buyer. That's basically what it means. it's a little iffy subject to discuss, but that's essentially, to boil it down, that's what that means. So, and most of the time, I mean, not a lot of buyers sign that up front. So sometimes they don't have that agreement in place, and it's really, any realtor can help them if they don't have one in place. So,
Okay.
So yes,
And
if they say I don't have anything signed, I will talk to them because they don't have anything signed.
Okay. And then we also do get people that, and I'm seeing this more and more often, and we get people that come to us, but then they're like, well, I know everything about real estate. I've been doing it for ages. I don't need a realtor. I want to go straight to the seller. And what advice can you give to those people? and so kind of want to see, you know, how can we, like, how should maybe me react to that in an ethical way, obviously, but really answering that question of why would anyone want to do that? And they tell me, well, because it saves people money.
right.
Can you?
You don't pay a realtor as a buyer. Our fees are already negotiated with the seller on a resale home by their agent and that broker. So if you're a buyer and you're looking to purchase a home, you need representation. I don't care who it is. Find you a good realtor. It doesn't have to be the four of us here. Find you a good realtor. As a buyer, you do not pay a realtor for their services. We are paid by the seller, or if it's a new construction, we're paid by that builder. So you're not saving anything, any kind of money that I can think of. You're really,
You're putting yourself in a bad position, really, because the person that you're going to work with is 9 times out of 10 going to have an agent. So why wouldn't you?
Right.
Why wouldn't you put yourself in the best position possible? You don't look at these contracts every day. You don't know how to negotiate on your behalf in this space. It's what we do every single day. So I think it's best to at least advise with one if you really are gung-ho about doing it yourself. But I think it's best that I mean, we're a little bit biased, right? We're realtors, but at the end of the day, it just makes the most sense. You don't put yourself in a bad position just to save money, especially when you're actually not.
Yeah,
and there's fees. If a realtor's charging you to talk to them, I'm sorry, I personally have a problem with that. Consultation fees, everything's just, I don't pay a realtor to have a conversation. Don't do that.
Yeah. I think often when people try to save money, or I guess if theoretically, if they're trying to save money or eliminate that, right, and go direct to the source, which is the seller, so they can save money, sometimes and oftentimes it does happen where they end up losing money because there's something that they weren't aware of that they needed to do in the transaction. We go, as realtors, we go through these transactions on a daily, and I can tell you that there's always something new that happens pretty often. We don't know everything, and I will never say I know everything because there's always something new in real estate. So if I can comfortably say that, because at least I have some resources, I can have my broker back me up, I can have someone to ask, right? If I don't know something, I can have someone to ask on any particular thing or situation that's happening. What about the end buyer, right? Where are they at? So if anything, representation, it means everything, especially now in this market with buyers that you're competing against, buyers that have everything together, their contracts, the terms, they have everything lined up. And if you go in and you throw yourself in there, man, you're leaving yourself, you're going to be very stressed. Yeah, exposed. So, yeah, representation is definitely important, but I don't know if that answered.
Edgar?
Yeah.
It does. Especially for, people out there and myself to, tell people that you do need representation. I mean, I'm glad to help you. If you're absolutely adamant, of course, I can't tell you otherwise. But yeah, I always tell them, you need some kind of representation.
Exactly.
Especially in this market.
And then a lot of things I also get questions on are, okay, it's getting crazy and it's been crazy. And how do I word this? So what I'm getting from some buyers as well is one of the things that they're doing is for, like, let's say they're under contract, they don't ask for any closing costs, but they're saying that in terms of like what I'm trying to say is you get the inspection done, right? And you find problems with the house, right? The biggest thing is that buyers tell me that maybe they're not relaying to you right away, but they're telling me, well, this and this realtor, or they're telling me that, these items are not a big deal. Why should I worry about them? I'll lose the house if I ask the seller to repair these things. I mean, what are some of the things that a buyer should be on the lookout for that should get repaired by a seller potentially? I don't know if that's a bad question.
I think I know how to answer this.
Yeah.
Not ignored, but there shouldn't be a huge impact or emphasis on it.
Yeah, for sure.
Go ahead, Melissa. Liza, do you agree? You always lead with health and safety.
Yes.
Like it's a big ticket item. And if it's just handyman stuff, I wouldn't nickel and dime a seller on that in this market. If your foundation's falling apart, you have a right to have a negotiation with the seller. I have news for you. Sellers may not want to negotiate, but if you start the conversation with, this is a major concern, this could be a big ticket item, health and safety, and then big ticket items, like, for example, you guys can give what that would look like.
HVAC, roofing, stuff like that. Those are, plumbing, maybe a plumbing issue that's going to cost a bunch of money, going to have to rip up the foundation, stuff like that. I mean, those are considered big ticketed items. I mean, just know that whenever an inspector comes, they're inspecting everything. It could be 60 to 100 plus pages. And that's why it's always best to have a, realtor represent you on that side of things, because they can tell you, look, these little things can be fixed. And, this is something that we can, put in our offer. Like, hey, can we get this ticketed item fixed? It's our roofing. It's going to potentially cause a leak in the future or something like that. So.
Yeah, definitely. And I think, Edgar, with buyers, we're going to rely heavily, right? If I'm representing a buyer on the buy side, we rely heavily on the seller's disclosure, which most sellers do have to. They're required. There's some exceptions, but most sellers are required to supply that. So one, we're relying heavily on the seller's disclosure, if and anything that are known about the home. And then two, that's why the buyer has their due diligence to do any and all inspections that they want to do. They want to get a general inspection. I always recommend it. I've had few in my career that have waived not doing an inspection, which scares me, right? But some people do. They just don't care to spend the money, oddly enough, to do an inspection. But I always recommend it. I think it's money well spent, because you will know any and all defects that are wrong with the home. Now, if there's something that's a concern to you, right, then we can definitely negotiate. And I always let my buyers know, at least if it's something small, I always let them know, hey, we can always ask, but there's a chance, right? One of the other things are going to happen. The seller's going to say, yes, I'll fix it. No, I won't fix it. I'll give you a credit. Or no, I'm not going to do any of that. One or the other is going to happen. We can ask all day long, but it doesn't mean the seller is gonna do it, or they could, right? We won't know unless we ask. But we try to educate a lot on the upfront to do your due diligence within the option period. Definitely ask for an option period. I see buyers in this market waiving that completely, which is very risky, unless you're very experienced, right? Unless you're experienced with dealing with roofing and plumbing, electrical, mold, any of that. If you're experienced that and you're comfortable waiving that, okay, then that's understandable. But if you're a first-time home buyer and you're trying to win a home in this market and you're waiving that option period, you're risking a lot, and it could probably be your worst nightmare. So due diligence for sure.
Also, the listing agents, I will say this, Edgar, while you're making those negotiations, a lot of times the listing agents have already gotten permission from the seller on how much they can talk about regarding what the seller's hard line is. So they may tell their listing agent, if you're a buyer, your agent's talking to the seller's agent, they may say, look, I know for a fact my seller will not do the following items, so let's negotiate the other things. So you may know right away what you can ask for. And I always think it's good to have that conversation and have a good rapport. Make sure your realtor's got a good rapport going with the other agent, because you may be surprised that a seller was completely prepared, to fix the broken garage door, and maybe you didn't want to ask for it. So, having an agent to have a good rapport with the other agent is important.
Exactly.
Sweet. I think that's about all I can think of in terms of questions right now. I mean, I'll probably have many more in the future, but
Yeah.
I think
for
those
sure.
really help out buyers.
This was fun, guys,
This
right?
was fun.
It really was. I feel like it was really, really helpful, Edgar, to have you on here. I mean, there's like
Yeah,
a million
I agree.
questions that always pop into our head as realtors that we're like, ooh, I wonder about this. Ooh, I wonder about that.
Exactly.
So this was awesome.
No,
Yeah,
for
you're welcome.
sure. I think
Thank you.
I really enjoy this, and I think we're getting better and comfortable at discussing more in-depth conversations about things that happen. I mean, I think that's important for buyers to know. I don't think they just want to know data. I think they want to know scenarios. They want to know people's opinions, and I think we have all of our collective experiences here to chime in on our stories, and then Edgar as a lender to ask us questions as well. That was kind of neat to have that too, because buyers get to see that as well, what our opinions are, our thoughts are, if they're on the fence of using a realtor or going direct to the source. So these were all great questions, and I appreciate that.
Thank you. Yep,
Thank
good
you so
answers.
much for coming on.
Yeah.
You're welcome.
And thank
God
you
bless.
for everybody that tuned in.
Yes, thank you everybody. And
everybody
again,
for tuning
you know how to reach Edgar. When we're about to end the stream, but when I end it, I'm going to attach his link and his contact information so you know how to contact him. It is in the chat, but I will just make sure you go back to the stream and look at the description in the video to look at his website, his contact information, to get a hold of him if you have any questions. But other than that, guys, this is a wrap. Thank you so much, and we will.
Oh, wait, don't
yes.
forget to like and subscribe.
Oh my gosh,
That's
yes,
right.
I'm
I was
horrible
just
about
gonna say,
this.
thank you,
I
Liza.
never ask anybody just because I don't know why. But please like and subscribe our YouTube channel. It's ATX Homegirls. We would appreciate that. Maybe I don't know, ask your friends if they want to, if they're in the market or they're curious about real estate, they're thinking about selling, they should like and subscribe this channel. We do provide a lot of valuable content, and we will again, if we do lives on Wednesdays every other week. I don't have the date off of the top of my mind, but I'm about to get it. The 16th.
16th?
Yes.
Yeah.
So February 16th at 7 p.m. is going to be our next live, and we will be posting on more details on what that topic's going to be like.
We're trying to hit 100 subscribes by the 16th. So if we can beat that, I don't know. I might wear a silly hat or something. I don't know.
I don't know. y'all chime in. Y'all tell us, hey, we'll do it. No.
Just say what you want to see us wearing. I don't
Right.
know, but we definitely want to get 100 by the 16th, by February 16th. Thank you
Awesome.
guys so much
Yeah,
for
thank you.
tuning
There
in.
you go.
Thank you. Bye.
Bye.
Have a good night.
Thank you.
Are we done?
I'm ending it right now.
Dang, Amanda.